Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome back to the analysis of the Forex market. As usual, we will discuss the situation on the euro currency and start from the daily time frame. Well, in general, our medium-term expectation hasn't changed, and we expect, as we discussed during the previous week, this development of this A, B, C bottom, D pattern on the weekly time frame. And current price action, if you will take a look at the logic of these moves on the market, now is near the perfect to the behavior that should happen in such cases. First of all, we have this solid thrust to the upside, ABCD retracement right to the 50% support, while weekly trend by MACD indicator holds bullish. So weekly trend holds this retracement to this 50% support of that swing. And now market starts pull back to the upside from that level, shifting trend on the daily time frame also on the bullish side. Our recommendation on the Thursday of the previous week was to enter long its 131.40 area. It's right here because this is the first retracement after the trend on the daily time frame has turned to the bullish side in a row with the weekly time frame. So now we have the solid bullish context. That's why we have recommended to enter long in that level. On Friday, still, I've been a bit confused by the price action on the intraday charts, since this move to the downside was really solid and this was the significant downward candle that suggests from the probability point of view that market could proceed a bit lower and could show some a bit deeper retracement. But anyway, this doesn't change overall picture on the daily time frame and the weekly time frames. Well, the minimum target of this pattern stands slightly above this swing high. It's around 135.25 area. It's right here. This is 618 extension of that swing. So still, just to get more assurance that probably market is really strong on the bullish side of the market, I prefer to see another thing. I prefer to see that market will break out this level, because until this will happen, at least theoretically, this pattern still has the chances to work, and that is the head and shoulders pattern on the daily time frame. Although I do not recommend to enter short from that level and to trade with this pattern, since overall context on the weekly as on the daily time frame is bullish. But if you still have the bearish side of the market and you would like to trade this pattern and you would like to grab the really tremendous risk reward ratio, that's your chance. So if you would like to take that risk, you're welcome, because now market stands right in the area of the break-even point of this pattern. So if market will proceed a bit high and break this level to the upside, then probably this pattern will fail and you will not lose much money. But if you will be right and market will continue move to the downside, your risk reward ratio will be just outstanding. But again, that is not my preferable scenario, and personally I will not enter on the short side of the market. You should understand our position correctly, since the task and the job of the analysis is to find the reasons to justify the potential view on the market, because all of us understand that could happen anything on the market. So even if you suggest that this should not happen, and after that it is happening, so that's really possible, because this is the probability. Well, and if you do not have the foundation for the potential development of the situation on the market, if you do not have the reasons and do not want to take the part in this potential move, that is the job of the analysis. That's why since we have the weekly bull trend, we have the daily bull trend, we have just shallow retracement of the 50% support, and we have the development of this ABCD pattern on the weekly time frame, and that price action also stands in a row with this development. That's why our bullish medium-term scenario looks more preferable and our preferable view on the market rather than this head and shoulders pattern. On the 4-hour time frame, what we have, this is the head and shoulders, reverse head and shoulders pattern that we have discussed on previous week in our weekly research on the farm. The target of this pattern stands right here, 1618 extension of that A, B, C bottom. Okay, it's 135.90 area. Also, this target stands very close to the weekly 618 extension of the ABCD that we have just discussed. Take a look at that 4-hour time frame, also trend also on the bullish side. Slightly above the market, we can see the area of agreement. That is the 618 resistance that we just discussed on the daily time frame from that swing, and 618 extension target from that pattern, A, B, C bottom. It means that market probably could respect that area somehow, maybe with some shallow retracement, because this is minor target, it's just 618, and if market really has the significant bullish potential, it probably should not show the deep retracement, and even more, it should not erase this starting move to the upside, take out that low. If this will happen, then probably we will need some more confirmation, some more expectation, and to wait a bit to clarify the situation. But if we currently speak about our upward scenario, then probably market should reach that level and show some shallow retracement to the downside. On the hourly time frame, particularly, you could see what level would hold the market during this retracement. When the market will touch this level, there are two levels to watch for. The first one is nearest 3 support, it's around 132.34, it's right here, and next level is right here, confidence support levels 131.82, 131.97. One of these levels should hold the market if bulls are really in charge. So current analysis looks maybe a bit complicated, but in general there are two things to keep in mind. First of all is medium-term expectation currently, at least based on the recent price action, is bullish. The second, just for more safety and to get more confirmation and assurance with this bullish scenario, it's probably better to wait the breakout, taking out of that resistance level and closing of the market, holding of the market above it, because this is really extended ABCD pattern, and we will have a lot of moments to join with this party if market will proceed to the upside. It's no sense in the taking additional risk and trying to anticipate this potential move to the upside. Also, take a look at this that we have just discussed. After that solid candle, I thought that market could really continue a bit move to the downside, because the probability suggests that in most cases this happens. But the fact that market hasn't confirmed that and totally erased the thrusting move to the downside also gives us some more confidence that bulls are really strong now in the current environment, and market is ready to really could proceed high and roll with our ABCD pattern on the weekly time frame. So still, if you would like to try to enter long before market will close above this daily resistance at 131.33 area, you probably could watch for this support or that support levels in the beginning of the week to search the possibility to enter on the on the long side of the market. If market still will take out the 618 support of that swing and continue move to the downside, that will be the worry sign, because this will be too deep retracement for reaching just the 618 target, because this is the minor target. Market should not show some significant retracement.